Hey everybody, Rob Maurer here, and today we're talking about some news on Giga Berlin and the Model Y timeline, Tesla Supercharger Factory in China, more info on Tesla in Israel, and a couple of other notes. Quick look at the stock. I didn't see a whole lot driving this today, but Tesla did finish down at 2.1% to $854.69. That compared to the NASDAQ, which closed just slightly down today, down 0.02%. All right, first up today, we have an update on the timeline for the Model Y out of Giga Berlin. Tesla has updated their design studio in Germany for the Model Y, and it now reads, quote, "Production is expected to start in mid-2021," end quote. Some sources are reporting on this, saying that mid addition adds more specificity than was previously available. I'm not able to confirm that. I don't know exactly what was listed here immediately before this change, but I was able to find an archived version of the page from November 18th from the Wayback Machine. And at that point, it read, quote, "The start of production is planned for the beginning of 2021, end quote. That's the most recent archive I can find, so I'm not sure if at some point that became less specific and just said 2021 in general rather than the beginning, or what it now says of mid, which I do think is important context, because if Tesla had become less specific and it was just general 2021, there wouldn't be a ton of incentive for them to make that more specific unless they had a higher degree of confidence in that timing, versus if it goes from beginning to mid, that could just be something that's updated as time goes by. Something relevant here that we haven't really spent any time on yet is the photos that Tesla published in their Q4 update, which included photos inside Giga Berlin. So I went back and I compared that to the photos that Tesla had shared of Gigafactory Shanghai before production had started. And there were some that Tesla had shared in the Q2 2019 update back in June 2019, which ended up being about 5 months before the start of production and then about 7 months before the start of deliveries. And to me, it definitely looks like Giga Shanghai had more stuff going on, more equipment installed at that point in time than Giga Berlin does now. So that is just one benchmark, and of course equipment could be installed more quickly in Giga Berlin, although Shanghai did come up really fast. But if we use that as a benchmark, it could still be 6+ months before production is really ready to go at Berlin. So even with this mid-2021 date, I'd be a little bit hesitant to expect something like May. And even then, if we see a similar timeline to Shanghai, it could still be a month and a half or a couple months after that Tesla actually starts to decide to deliver those vehicles. Either way, I expect we'll get a much better understanding of the progress after the Q1 earnings report. I would expect Tesla to share similar photos, and by then I think they'll have a ton of that equipment in there and getting ready to go. Next today, we have news on Tesla's factory in China, not Giga Shanghai, but Tesla's Supercharger Factory that we've been talking about for the last couple of months. Looks like that has now officially started production per Jay in Shanghai on Twitter. Tesla again demonstrating incredible speed here, with this project being launched less than 6 months ago. Previous reports had indicated that Tesla intends to produce about 10,000 superchargers per year out of this factory, which should allow for roughly a doubling of supercharger deployments. In 2020, Tesla added 7,000 chargers, but more than half of those came in Q4, so 3,800 in Q4. If that Q4 rate is annualized, that's about 15,000 per year, but we don't necessarily know if Tesla's actually at that run rate for Q4, or if that was just stock that built up and was deployed in Q4 from supercharger production that had occurred earlier in the year. But roughly, it looks like this should be a doubling of Tesla supercharger capacity in terms of new installs per year. If Tesla can get this supercharger factory up to capacity in the next couple of quarters, and if their actual capacity outside of this factory is something around that 15,000 level, we could be in line for something near a doubling of the supercharger network in 2021. Tesla ended 2020 with just over 23,000 supercharger connectors, so while I'd probably estimate something more like 60-65% growth, I don't think a near doubling is completely off the table. All right, next up, I want to continue a topic from yesterday, and that is Tesla's expansion into Israel, because I actually got some new information from a couple listeners over in Israel about the situation for Tesla there. I think the simplest way here is just to read directly what I was told, but first things first, I did get the pricing wrong. It looks like it's actually a little bit cheaper after taxes than what I had said yesterday. I had said after taxes, the Standard Range Plus Model 3 started around $62,000 once converting, but it looks like the taxes end up being a little bit lighter, putting the starting price after taxes at around $55,000 in Israel. Obviously good news there, so let me continue to reading what my listener sent me. He wrote, quote, "The cost of the Standard Range Plus Tesla in Israel is 170,000 shekalim, or $51,530, and with taxes about 179,000 shekalim, right around $55,000. This is a significant reduction in taxes. The tax on an ICE vehicle is 83%, and on an electric car, 10%. Hybrids are taxed at 50%, and plug-in hybrid electric vehicles, 30%. The tax benefit is capped at 75,000 shekalim. It gets more complicated since there's an additional luxury tax of cars with a selling price above 300,000 shekalim. The bottom line is that Tesla is selling its Model 3 in Israel for just under 180,000 shekalim, $55,000. It is interesting to compare the Model 3 to existing electric and ICE vehicles, which he has then shared some comparisons for. The prices here include taxes, and I'll just talk from a US dollar perspective after converting. Tesla Model 3 there at 55,000 with a WLTP range of 278 miles. Then for comparison here we have the Peugeot E2008 that starts at $50,000, WLTP range 199 miles. Hyundai Ioniq EV that starts at about 48.5 and has a WLTP range of 193 miles. And then the MG ZS EV Net S that starts at $39,000 for a 163 mile WLTP range. As for internal combustion engine vehicles, looks like Tesla starts right around the price of the Toyota Camry LE Hybrid Edition, that's at $56,000. The Skoda Superb Not Hybrid Edition, that's $52,000. And then, as I said yesterday, the lowest price BMW, at least for the 3 Series, that's $78,000. And the plug-in hybrid entry-level model is $95,000. So our listener continues on to write, quote, "As you can see, the Tesla Model 3 is very competitive. I am confident that it will be a huge success in Israel. One last note, the Globes newspaper in Israel, a leading business newspaper similar to the Wall Street Journal in the US, reported that the Phoenix, a large Israeli insurer, will be offering Tesla's unique insurance model based on personal driver characteristics. The Phoenix declined to comment on it, but from the article, quote, "The Phoenix has signed an agreement with Tesla to insure the buyers of its vehicles in Israel. Tesla will offer through the Phoenix its unique insurance model, derived from the driving nature of each driver, based on the data coming from the vehicle," end quote. The Phoenix had no response to that article, so it looks like Tesla may be at least putting in the groundwork for an insurance-based product there in Israel as well. If that ends up being the full Tesla insurance sort of 2.0 version that Zach talked about a couple of conference calls ago, remains to be seen, but I did think that was an interesting note. The last little tidbit on Israel that he shared was that for the first orders placed yesterday, the estimated delivery date was March, and that has now already shifted back to June. Not terribly surprising given where pricing has come in, and the fact that we're already into the first week of February, and whether these vehicles are being fulfilled from Shanghai or from Fremont, Tesla's probably getting close to that point in the quarter where most of that production will be for domestic purposes. All right, next up here, we do have a little bit of news on Giga Shanghai. This is a follow-up to an early January report that Tesla had filed an environmental impact assessment for some of their expansion plans for Giga Shanghai. So Kelvin Yang on Twitter, I think, was the first one to note this. Tesla has acquired permission for what is included in that environmental impact assessment. As for what is actually included in that, it's tough to say. Tesla has redacted a lot of information here, but the report does mention increasing production capacity for the Model 3 and Model Y, and probably most noteworthy, does mention a new model, though we have talked about this in the past. And again, this assessment has been publicized since early January. This is now just the approval of something that was already out there. So it is a nice little headline generator, but I'm not sure that we're getting any new information here, or that there's really anything that can be gleaned as far as timeline goes on whatever that new model is. Nevertheless, it's of course good to see that Tesla has had this environmental impact assessment reviewed and approved. Last few things for today then, some big news over at Daimler. Daimler has announced that they will be splitting the company into 2 standalone companies, one being Daimler Truck and one being Mercedes-Benz. Daimler cites a few different reasons for the decision, including independent operations, more entrepreneurial opportunity, greater flexibility, more transparency, and a few different times they mentioned creating pure plays for the capital markets. The chairman of the supervisory board of Daimler said, quote, "Mercedes-Benz and Daimler Truck enter this transformation with significant strengths, and we are convinced they will emerge even stronger as independent companies, serving their respective customers. With their different return profiles and capital needs, the rationale for 2 independent entities is evident. We are convinced that the capital markets will appreciate the opportunity to invest in more clearly focused, pure play businesses," end quote. So I do expect that's probably accurate, but I'm not sure this is the spin-off that the markets are going to be really looking to reward Daimler for. I think both businesses face very similar challenges. Anyway, this will still have to be approved. It looks like they'll have an extraordinary shareholder meeting sometime in Q3, and they do expect this transaction to happen sometime this year. If it were to happen, essentially the structure would be that current Daimler shareholders would then own both Mercedes-Benz, and then Mercedes-Benz will retain a minority ownership stake in Daimler Truck, but not vice versa. Anyway, should be interesting to follow the valuation changes around that later this year. Next up here, we have some news from Rivian and Amazon, which of course have partnered for a delivery van for Amazon, which they expect to purchase about 100,000 of over the next decade. Amazon announced today that they have started customer deliveries in a test capacity with the first versions of these electric vans from Rivian in parts of Los Angeles. They also say that they expect to expand to 15 additional cities this year, and they expect to have 10,000 of these delivery vehicles on the road, quote, as early as 2022, end quote. So obviously a lot of flexibility in that statement. But as far as these first vehicles go, they say that, quote, the current fleet of vehicles was built at Rivian's studio in Plymouth, Michigan, and can drive up to 150 miles on a single charge, end quote. Rivian's main factory is in Normal, Illinois, so I would expect that's probably where they intend to produce this van at volume, so these are not production line vehicles yet. All right, last thing today, just an update on what's been playing out in the markets in general over the last couple of weeks. Reuters reported last night that U.S. Treasury Secretary Janet Yellen has called a meeting of top financial regulators this week to discuss the volatility that's been happening in the market related to GameStop and some other stocks. This meeting will include the heads of the SEC, the Federal Reserve Bank of New York, and the Commodity Futures Trading Commission. A spokesperson for the U.S. Treasury told Reuters, quote, Secretary Yellen believes the integrity of markets is important and has asked for a discussion of recent volatility in financial markets and whether recent activities are consistent with investor protection and fair and efficient markets, end quote. So I guess that's a start. We'll see if anything comes out of that. I wouldn't have super high hopes for any sort of massive reforms or anything like that, but at least there is some attention being given to what has unfolded in the market over the last couple of weeks. But at least from this communication so far, it seems like the focus is on volatility, which I'm not sure is really the root of the problem. Anyway, we'll keep an eye out for anything coming out of that meeting, but that will wrap it up for today's episode. As always, thank you for listening. Make sure you're subscribed and signed up for notifications. You can also find me on Twitter at Tesla Podcast, and I'll see you tomorrow for the Thursday, February 4th episode of Tesla Daily. Thank you.